very strong move and up move in the market today. We're also getting joined by Mr. Mihir Vora, who's the CIO of Trust Mutual Fund. Mr. Vora, thanks so much for joining in. We've seen a very sharp move and on a positive side, specifically for the Nifty 50. Any view that you have specifically currently on the market?
Sorry, you're asking of the Nifty?
Yes, we've seen a very strong move in the market. The bulls have, come back in a sense, and we've seen the banking and the financial names specifically, which have been, one of the key reasons for the growth today in the market and its prices as well. What's your view specifically on the banking as well as the market move that you're seeing currently?
So if you notice, India has been among the few markets which are actually above the pre-2nd April Trump tariff levels. So I think it's a testimony to the fact, and probably the FII is also realizing it, that India will probably be the least impacted. There will be an impact, of course, on exports, etc. But relative to the other countries in the world, India should be amongst the least impacted. That's one. Second is, typically we have seen in most of the crises, it's ultimately the Indian consumption story remains very, very solid. And India does tend to kind of rebound also quite well after most global crises. So I think India's relatively lesser dependence on exports is one. Second is the overall RBI policy approach also has now turned more dovish. So we are seeing liquidity come back into the system locally. And third, I think most importantly, for the first time in history, we are seeing that all the problems that are typically associated with emerging markets are actually now being associated with the US. So we are talking about inflation there. We are talking about the dollar depreciation. We are talking about bond yields going up in the US. So typically in a crisis, all this used to happen to emerging markets in India. Now it's the other way around. So probably we are seeing some more FII buying after the last 2 days. Last 2 days, the cash market buying in from FIIs has been positive. And maybe I don't have the numbers, but I guess that buying still continues from the FII side. And domestics were anyway buyers continuously. So to that extent, I think we are seeing some kind of relief rally after the huge volatility that we saw after April 2nd.
Fair point, Mr. Vora, and you highlighted that India is definitely looking better when compared with the other countries in terms of the tariff impact, as well as RBI's very positive moves. I also wanted to get your view on the banking names, because we've seen almost 1,000-point up move on the Nifty Bank, and just a precursor to the Saturday results for HDFC as well as the ICICI Bank. How are you viewing the banking space as a whole, and some of the key expectations from Q4, if you have any?
So Q4 expectations are not that great, frankly, because we haven't seen credit growth pick up that much. And the impact of the RBI liquidity and rate cuts will now start being felt. So my guess is that the markets are kind of preempting that move. But most importantly, banking as a sector did not do too well in the last couple of years for good reasons. You had the liquidity tightness, you had the RBI clamping down on unsecured loan growth, and you also had the volatility linked to the currency, etc. So banking in general had underperformed. So relative valuations of banking and the large NBFCs had become attractive in any case versus the rest of the market. And now that all those factors are being unwound, rupees stable, liquidity is ample, RBI is cutting rates, I think we are seeing the markets preempting growth coming back into the system, because growth was the only thing missing. Credit quality, capital adequacy, etc. were all fine.
Fair point, Mr. Vora. And also I want to understand, your view specifically, from the growth going forward. Where are you anticipating, in this particular quarter, which were the sectors? Because we've seen the auto pack getting impacted slightly because of, the Trump tariffs. Banking, you spoke about the Nifty IT, not too much great, coming in from that news and from TCS as well as from Wipro. So what sectors do you think specifically do we look at going forward? Because we've seen the market reacting to, as you rightly mentioned, some earnings coming forward. So what's your view on which sectors do we watch out for going forward?
So as you said, the March quarter earnings are not going to be anything great in any case. Single-digit earnings for the large caps, earnings growth for the large caps. So we will have to look forward, and there all the domestic segments look fine. We already discussed banking. Then we are talking about even the domestic cyclicals like industrials, etc. coming back. We do see government ordering supporting that, and hopefully with manufacturing in India gaining prominence, probably we can see the industrials also done well. Power, railways, defense, anyway were segments where government has been focusing on. There was a bit of a let-up in ordering, which led to a sharp correction in the stock prices. So these are some of the segments which will recover, I think, as we go forward.
Good afternoon, Mihir. Hiral this side. Mihir, the kind of rally that we are seeing right now in terms of where markets go, I mean, something which probably the street was slightly nervous about. However, the upside is looking fabulous. Do you think there is confidence which is coming back in the markets, number one? And secondly, it seems that the FIs probably are seeing some bit of short covering in terms of their strategy. How are you looking at it?
I think there is no euphoria as of now. I think people are still worried about the volatility. So we are not really in for a completely bullish view from the market participants. So there is enough, I would say, enough steam left because there is still a healthy dose of skepticism in the market, I would say. And I would agree with your view that some of the rally might also be driven by FIIs who are short on the market in the futures segment, in the derivatives segment. But it also may be some amount of reallocation coming back to India after what we saw in December, January, Feb, where some money had actually gone to China, and people are talking about India versus China, etc. So maybe some of that rebalancing trade also might be happening, and if that continues, we should see some more money coming in from the FIIs.
Here, hi, Tamanna here. Great to speak to you on what is turning out to be a very exciting afternoon with volumes coming in. From an India perspective, a sense now that comparative to China, as these reciprocal tariff rates keep getting higher and higher, that India is going to be the destination. In that sense, do you even see foreign investors returning, or this is going to be largely a domestic story?
I hope they come back, Tamanna, and put a smile on our faces, because they've been selling for so long now. September, October, November, December, January, February. I think March was the first month after 6 months that we saw some net buying by FIIs. So they already seem to be underweight India, and even if they want to make it neutral versus China, etc., we should see some good money coming in. Another statistic that we keep discussing is that calendar year 24 was a year where, on a net basis, FIIs were sellers. And statistically, at least historically, what we have seen is we haven't seen FIIs being sellers for 2 consecutive calendar years in the last 25-30 years. So hopefully that track record won't be broken, and FIIs should end up being net plus by the end of calendar 25.
Thank you for that, Mihir, and always a pleasure to speak with you.